Uncovering the mystery behind the rich and their wealth, it's not a secret that they often resort to hiding their money. In this video, we're lifting the veil and revealing the most popular methods the rich use to conceal their wealth and avoid taxes or for any other purpose. So, buckle up and pay close attention because this is not a video you want to miss. Let's get started. One strategy the rich often use to protect and grow their wealth is through investing in municipal bonds. These bonds are issued by local governments or their agencies to fund public works projects like roads, schools, and more. When you invest in a municipal bond, you are lending a set amount of money for a set period of time. In exchange, you receive a higher interest rate compared to traditional savings accounts. This, combined with the added bonus of tax protection, makes municipal bonds an attractive option for the rich and savvy investors. With your capital remaining secure and earning interest, these bonds provide a steady and reliable source of income. It's no wonder why municipal bonds are a popular choice for hiding money among the wealthy. Another popular method the rich use to conceal their wealth is through offshore tax havens. These are countries or places that offer low or no taxes for individuals and businesses to store their money. The main draw for the wealthy is the privacy and protection of their assets. The lack of information sharing between tax haven countries and foreign governments makes this option even more appealing. However, it's important to note that having an offshore bank account is illegal in many countries and can result in serious consequences if caught. Switzerland and the Cayman Islands are considered top choices for offshore tax havens due to their strict privacy laws and secure banking systems. While you may earn some interest, the main advantage of an offshore bank account is the peace of mind knowing your money and assets are protected. Conserving easements or restrictions is yet another clever way the rich minimize their tax burden. This is an agreement between the landowner and the state where the landowner transfers certain rights of the land to the easement holder, while still retaining ownership and control over the land. This can include farming, keeping it as a forest, or even living on the property. By using this strategy, some landowners have been able to significantly reduce their gross income. In the United States, donating qualified land to a recognized protection body can also result in a federal income tax deduction equal to the value of the land. It's no surprise that the rich love using conserving easements as a way to hide their money and protect their wealth. Investing in qualified opportunity zones is a smart way for the wealthy to enjoy capital gains incentives. This strategy is based on a new law designed to revitalize economically disadvantaged areas through private investment instead of relying on taxpayer funds. To qualify as an opportunity zone, an area must meet certain requirements, such as a poverty rate of 20%. To reap the benefits of capital gains incentives, the investment must be made through opportunity funds. It's no wonder why the rich are attracted to this opportunity to grow their wealth. Life insurance can be a wise way to secure your finances, just like the rich. By simply opening an account with an insurance company and committing to regular premium payments, you can take advantage of this financial tool. The beauty of life insurance is that all transactions with the insurance company are kept confidential, and you don't have to worry about any tax deductions on your premiums or loans from the policy. In the event of your passing, the designated beneficiary will receive the death benefit tax-free. Furthermore, loans taken from the policy can be used to invest in potentially profitable ventures, such as starting a business or buying property that has the potential to appreciate over time. In conclusion, if you're looking for a smart way to secure your finances and potentially grow your wealth, consider opening a life insurance policy. The confidentiality and tax benefits make it a great option for those who want to manage their funds like the wealthy. The rich often use money gift giving as a strategy to manage their funds, and it's a strategy that you can adopt too. By giving gifts, you may be able to avoid paying taxes, but it's important to understand the limitations. If you give gifts above the tax-free limit, you may be subject to taxes. However, you can mitigate this by splitting your gifts into smaller amounts or giving gifts for specific purposes such as education or medical expenses. In these cases, you can direct the gift directly to the educational institution or medical facility to take advantage of tax-free giving. Offshore subsidiaries are a popular way for the wealthy to manage their money and minimize taxes. This strategy is commonly used by big corporations and international companies, among others. The main purpose of having an offshore subsidiary is to take advantage of countries with lower corporate tax rates. By transferring income to the subsidiary registered in a low-tax country, the company can greatly benefit and reduce their overall tax burden. Additionally, expenses can be transferred to countries with higher tax rates, allowing for further tax savings. It's not just large corporations who can take advantage of offshore subsidiaries. Individuals can also emulate this strategy to manage their money. Sector 199A is a tax deduction designed to benefit various types of businesses including estates, trusts, sole proprietorships, partnerships, S-corporations, and limited liability companies. This deduction allows eligible taxpayers to deduct up to 20% of their assumed business income, not just the actual economic expenditure. This tax advantage is a clever way to manage and potentially increase your wealth, which is why it's a popular strategy among the wealthy. Whether you run a small business or a part of a larger corporation, Sector 199A can provide a valuable tax benefit. Charitable giving is a smart way for the wealthy to hide their money and reduce their tax burden. By making substantial donations to charitable organizations, they can protect their wealth and see it grow tax-free. Whether it's through direct contributions or by investing in a charity savings account, this approach allows for the money to grow and for the donor to have more time to decide on which organizations to support. By giving to charity, the rich are not only hiding their money, but they are also making a positive impact on society. The wealthy often choose to hide their funds in countries where it's convenient and suitable for them. This is often done for political stability or for security purposes, as they believe in spreading their wealth across multiple baskets to minimize risk. However, the main reason they opt for this is to avoid high taxes. They look for nations with low or no tax rates so that they can save more of their money. It's not illegal to have an offshore bank account, and anyone can open one to enjoy the same benefits. By doing this, you can earn capital gains without being taxed, which is a great advantage. A shell corporation is essentially a legal entity that exists as a structure for holding assets or conducting business, but doesn't have any real operations. They are often used to conceal the identity of the owners, making it difficult for the government or public to know who is behind the business. While some shell corporations may be legally established, others may be involved in illegal activities. Legitimate shell corporations can be used to raise funds for startups or secure finances, but they also have a negative reputation due to instances where they've been misused for tax evasion or illegal purposes. People channel their earnings through shell corporations in such a way that it doesn't show up as personal income, which is considered unethical. Most shell corporations are set up in countries with low or no taxes, making it a popular choice for the wealthy to hide their money. The wealthy often use issuing stock options as a clever strategy to reduce their tax burden. By issuing stock options to their stakeholders, they can lower the amount subject to taxation, as these options are not considered expenses. When stock options are issued, they do not show up as an expense and automatically reduce the profits, resulting in a lower amount being taxed. Additionally, the stock options issued are recorded as expenses but do not reflect as an outflow in the account records since there is no actual cash exchange. This allows the company to reduce the profits on paper but still retain an abundance of actual profits. For individuals who own businesses, it's crucial to utilize the tax benefits available to them. One such way is by writing off business expenses. This helps lower their taxable income and provides a smart financial strategy. Examples of eligible expenses include car maintenance, entertainment, and equipment repair. The goal is to strategically lower the amount of taxable income by properly documenting and deducting all necessary expenses.